Welcome back, Forexia family. This is part number 7 of the Forex Mastery course. We are starting where we left off on part number 6. Before we get started, this is the risk disclaimer, so be sure to pause the video and go over that risk disclaimer. Alright, jumping right into it, the midweek reversal. We have 2 potential midweek reversals of a perfect example week. All right, every single week, if we get exactly what we want, we'll have 2 potential perfect reversal opportunities. Now, I say this as if it was happening every single time, as if it was a perfect market. We know it's not a perfect market every single time, so sometimes, some weeks, there will be only 1 potential reversal of the week, and other times there will be no midweek reversals for that pair. So we want to look at multiple pairs at once and get all the different variations of different midweek reversals in front of us and see which pair is giving the optimal opportunity at the time. So here's an example. This is GBPUSD. This is 1 week. We have Monday, Tuesday, Wednesday, Thursday, Friday. You can see the obvious trend come Sunday, Monday, Tuesday. And we can see that midweek reversal come Wednesday. Another example, perfect, very obvious downtrend, Sunday, Monday, Tuesday, induction trend. Wednesday, Thursday, they made the low of the week and then completely reversed the market off of that low of the week, completing that perfect midweek reversal. So this was another example on USDCAD, US dollar versus the Canadian dollar. You can see the low, the W formation off of that low, second leg right into this zone, the liquidity zone that we have plotted out right here. Along with session timing, this is the 1 hour time frame, so this would be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 or 13 candles. That's right around between London and New York session. So right around there, right in the middle of London session. Now we can see the level 1 right here. This would be our take profit level number 1. This is the high of the week. So that would be our optimal TP level. Now we can also notice in the previous lessons, the previous parts of this series, I talked about connector piece, and this is that connector piece. So we can see the end of a week and the beginning of a new week starting in consolidation, and then the end of this week and the beginning of the next week starting in consolidation. Looking at a new pair here, a new example, USDCAD 1 hour time frame. Here we see another trend. It is an uptrend. We have a low, we have a high, we have a low, we have a higher high, we have a lower low, we have a higher high, we have a lower low. So this is obviously characteristics of an uptrend. Continuous higher highs, Sunday, Monday, Tuesday into Wednesday. They make the high of the week off of Wednesday, off of the previous day's high, Tuesday, and the high of the previous week. So off of the previous day's high and the previous week's high right here, we can see there's going to be a lot of orders at these highs just because the market is uptrending, or at least that's the characteristic. And if retail traders that trade based on these characteristics, based on just blindly going with the trend, they are going to be placing their limit orders right up here, their buy limit orders, trying to catch that breakout of the trend. That's what this candlestick is for, to hit all of those orders, fill the orders, and then completely reverse against them and hit their stop losses that are most likely below this low, right? Why this low? Well, this is the current low of the week right here. At least before this happened, this was the low of the week. And then obviously they broke past this low and hit all the stop losses below that low of the traders that got trapped right up here. So as I was saying, right here is a high, another high, the highest high. Right here is that liquidity zone where they are grabbing all of the liquidity right up here at the highs and then reversing off of the highs. Okay, so we've added some more examples. We have the obvious signature trade pattern where we have the wedge and then the breakout to the high, come midweek, reversal off of the high of the week. Also combine it with timing. So this was a perfect timing of the New York session breakout and reversal. And then, as I mentioned, the TP level number 1 would be right past, right under this previous low of the week. Okay, so this was an example of midweek reversal. Now here's another example of a reversal, but this is the Tuesday reversal. So just plotting some of the obvious zones or supporting resistance that I see on the chart. Here's the obvious start of the week trend, starting from the previous week, Friday into Sunday, Monday, and then Tuesday. This was 3 days of uptrend. Remember what I said previously in our previous examples, we have 3 days of uptrend. Normally, that's when a trend starts to become obvious, right? We have 1, 2, 3 hits to the trend line, 1, 2, 3 hits to the trend line. The trend is becoming obvious. It's easier to plot the trend. More and more people can see the trend. So that just makes it more likely to reverse and not go in the direction that the masses believe that it will go. So we can see the high of the week was made Tuesday. The liquidity zone above the high of the previous day, right here. This wick marks the high of the previous day and the current high of the week. And then right here, as we can see, London session comes up in one big fat green candlestick. Boom, shoots right above that high, trapping the buyers, trapping retail traders that think, oh, I'm just going to buy this uptrend and make money, right? As if it was that easy. TP levels, once again, you guys can see it's very repetitive, right? It's not like I'm placing my TP levels in random areas. No, once again, take profit level is below the low of the week. So right here, this wick marks the low of the current week. The low starting Monday, Tuesday, and then even into mid-Wednesday, that was still the low. All right? Until late Wednesday, these few candlesticks smashed the low and made a new low. But what were they doing? What was this move, this big move right here? There's a reason this move was made. It was to grab as many stop losses as possible, hit as many stop losses as possible, as fast as possible, of the traders that were trapped in this area. Okay? And notice I have a level here and a level here. Why is that? Because this is the low of the week up until late Wednesday. And then right down here, this is another low, it looks like, of the previous day here, Friday. Potentially the low of the previous week. I don't know. But we can see it is obviously the low of this day, this previous day, Friday, at least to the looks of it. And that's why we have another TP zone right under this. You can see in 2 candlesticks right here, at least, all right, in 1, 2, 3, 4, 5 continuous candlesticks on the 1 hour time frame on GBPUSD. They went from this zone right here to smash all the TP levels or hit, in the retail trader's case, all the stop losses. All right, let's keep going. This is going to be the bread and butter of this entire series, at least in my opinion. That's just because I created the signature trade. I love the signature trade. It is basically the best trading pattern, the best strategy in the entire market. So I've dedicated a large portion of this course to the signature trade. I have previously talked about the signature trade a little bit in the past parts of the series, and I have a lot of videos on our YouTube channel about the signature trade strategy. I have courses on our website for the signature trade, free courses, paid courses, all the content that you wish to have about the signature trade. We have developed it. Now, I'm pouring my heart out into this series, and especially into this part of the series, number 7, where we're talking about the signature trade. So, anatomy of the signature trade, micro and macro signature trade, simple and complex signature trade time frames, signature trade entry, signature trade days of the week, ADR Tuesday, signature trade, midweek reversal, examples. So, anatomy of the signature trade. What dumb money does. How to trade wedge chart patterns. So, if you were to, obviously the signature trade is something that I made. However, it depends a lot on another strategy, which is the dumb money understanding of the wedge pattern or the triangle pattern, the wedge breakout pattern, whatever the masses like to call it. But if you were to look up in Google how to trade the wedge pattern or triangle pattern, this is one of the most searched, most used patterns in the entire realm of trading. Everybody has seen the wedge pattern, and whatever you want to call it. There's so many different variations. There's ascending triangles, there's falling wedge, there's so many different variations. But if you look on Google and you just ask Google how to trade wedge patterns, how to trade triangle patterns, it will always give you the same query. It will always give you the same answer. Okay, it's pre-programmed to give you the same answer because everybody believes that everybody trades the same way, basically. All the masses trade based on this way to trade. Okay, identify the chart, the wedge or the triangle or the, right, on your chart. Watch for the breakout, confirm the breakout, enter the trade, set a stop loss, take profit, whatever, okay? The main 3 components of this is you're looking for a wedge, you're watching for the breakout, you confirm the breakout, and you enter the trade. So basically, you're just going with the trend, right? You're waiting for the breakout of this triangle, and then they tell you to either buy or sell with the breakout, okay? To understand the signature trade, it is the exact same, except we do the exact opposite, okay? When you find and identify the wedge pattern on your chart, you watch for the breakout. If the breakout goes to a high or a low of the day, the higher the low of the previous day, the higher the low of the week, right? If you're breaking out to that point and now they're stop hunting off of that low or off of that high, that's where you're going to want to look for more confirmations that a potential reversal is about to happen, and then enter your trade, but against the trend, against the breakout, okay? So, when understanding what dumb money does, this is how you know that dumb money is placing their stop losses where they're placing them, because they're literally taught to place their stop loss in these different ranges. So basically, dumb money makes the signature trade possible. Dumb money, the repetition of this cycle, makes the signature trade possible, makes this entire strategy possible. The anatomy of the signature trade. Dumb money sees a continuation of the downtrend, right? We have the downtrend, we have the wedge pattern, then apparently more downtrend. This is just a breakout here, breakout to the low, past the low. So dumb money sees continuation of the downtrend. Smart money sees an induction of the dumb money. Notice the difference here. So dumb money trades like this. Smart money trades dumb money. Smart money trades based off of what dumb money is thinking. Here's another example where the market price makes a wedge, forms a wedge or a triangle. We have the breakout to the high or the low. After the wedge has fully formed and come to a point, price will break out to the tip of the wedge, targeting the highs or the lows. This can be the high or the low of the day, the high or the low of the previous day, week, previous week, month, or previous month. Okay, here's an example. We have breaking out to the low of the day. And then shortly after that, we have the reversal. Reversal off the high or the low. After working the high or the low and trapping enough liquidity, dumb money, the market will reverse off the high or the low. Our entry is at high or low, and we catch the entire reversal. Here's another example, side by side, before and after, CADJPY, 1 hour time frame. This, you're not going to see this very often. And when I say that, this is absolute perfection, okay? Do not think that it's just going to give you, the market's just going to give you this week by week, okay? This was a absolute perfect example of the signature trade. So you want to keep this in your mind, this as a perfect example, but understand that there's going to be so many different variations. Sometimes a trend, the initial induction trend before the signature trade, sometimes it might not look this perfect. Sometimes the wedge pattern might not look like a perfect wedge, okay? If the shoe doesn't fit, don't make it fit. However, I guess this is more about trial and error and learning and understanding pattern repetition, pattern recognition, okay? It's all about pattern recognition in the end. I can spot these so fast. You can give me a naked chart, any chart of EUR/USD, GBPUSD, any chart, and I will instantly be able to analyze it and say, all right, there's the signature trade, there's the induction trend, there's that, there's this. And I can do that because of pattern recognition over years and years of practice. So here's a perfect downtrend. All of the previous confirmations that I've previously talked about are here. We have the obvious Sunday, Monday, Tuesday induction trend. We have the low. We have the breakout of the wedge. We have the wedge. This was forming, I believe this is right around London session or right before London session. We have the breakout to the low of the previous day. This is also the low of the week. And then as we can see, complete reversal. Take profit zone is at the high of the week, right? That's 120 pips for you guys. Zero drawdown, 120 pips. Look at that. Zero drawdown, absolutely zero on this trade. That is the power of the signature trade. That is why so many people absolutely love the signature trade. Okay, as I was saying, this is not going to happen all the time, right? This is absolutely perfect example. These are the different variations, right? This is the same thing that we saw right here, just an uglier version, right? If this is a 10, she's like a 10, this would be like a 5 or a 6, right? This would be like a, 7 or an 8. That's a pretty obvious Pretty obvious. Comes to a wedge, breakout, past the low. You guys see what I'm getting at here, okay? This is one variation. This is the next. Here's another. And over, just like this, you have to have the eyes to see it. It's not going to be picture perfect every single time. But if you combine all these confirmations that I'm telling you to combine, this is what builds the signature trade strategy. These are the stepping stones to become an expert trader at the signature trade strategy. Anatomy of the signature trade. Signature trade is a great entry method. It occurs on all time frames. It is possible to occur multiple times per day. It occurs in micro and macro. Signature trade after 3 days of induction trend is much more powerful. So sometimes there's signature trades and they don't happen after an induction trend. Sometimes they're just in the middle of consolidation. You guys can take those trades as well. However, the most powerful, that will give the most amount of reversal, most amount of pips, the biggest reward to risk ratio is the signature trade that happens after 3 days of induction. And then come midweek, we're prepping for that midweek reversal. The signature trade comes and you buy or sell off of the highs or the lows, and then you target the highs or the lows, okay? Problem, reaction, solution plus the signature trade pattern. So previously we spoke about the problem, reaction, solution, that entire concept in the realm of trading. How does it apply to the signature trade pattern? Well, the problem is the wedge pattern. Why? Because you don't know where it's going to break out. Dumb money is just waiting for this wedge pattern to break out. They are extremely impatient, waiting for this wedge pattern to break out. So it's a problem. As soon as they see the wedge pattern break out, let's say it breaks out to the upside, oh, that's the reaction. The reaction is dumb money being induced to buy with the trend, with that breakout to the upside. What is the solution? Remember, problem, reaction, solution. The solution is to reverse against the dumb money and hit their stop losses. It's as easy as that. If you have come to this point in time and you're still listening to this video, give it a thumbs up, give it a like, smash that like button. If you enjoy these types of videos, subscribe if you're not already subscribed. I'm going to be giving away so much more information throughout this series. All right, wedge pattern. Dumb money induction. Reversal to hit the stops. It's that easy. Okay, it really isn't that easy, you guys. I mean, it is, but what it all comes down to is psychology, okay? You guys have probably already realized that all of what I'm talking about, most of it is human psychology. We are defining these patterns by human psychology, by human emotional reaction, how masses react to what patterns occur in the market, and how we can manipulate, exploit, and take advantage of those patterns that are literally being exploited and manipulated against us. All right, the daily structure plus signature trade. You guys are going to love this one. Here's an example of daily structure plus the signature trade. If we have an entire day, this is the red is the start of the day. The red here is the end of the day. We have the start of the day consolidation. Come London session, breakout to the highs, then reversal. We can see right around here, it looks like another wedge pattern forms, breakout to the lows, reversal off the lows. If we string this together, string this daily structure together, we get this. Asian session, London session, reversal, breakout London session, reversal, New York session, reversal off of the lows, Asian session, London session, breakout, New York session, reversal off the lows, day 1, day 2, and then what do you know? So here we have the micro, right? And then right here we have that macro where we have day 1. The entire structure of day 1 is creating the wedge formation of the overall macro wedge that's happening day 1 and day 2. So what happens next is that reversal off of the low of the previous day to hit the stops. All right, what is the best day to trade? So you guys already know Sunday, Monday is the connector piece. It's better to wait for structure of the day to place a trade, so no trading. Tuesday is potential for reversal. Tuesday off of the high or lows of Sunday, Monday. That is the Tuesday reversal that we speak about. Best days to trade: Wednesday, potential for the reversal Wednesday off of the low of the week or high of the week. This would be the midweek reversal. Thursday, potential for a reversal trade off of the low of the week or high of the week. This would also be considered the midweek reversal. And then Friday, we have the connector piece, just like on Sunday, but Sunday is the beginning of the week connector piece, and then Friday is the end of the week connector piece, connecting to the beginning of Sunday of the next week. Okay, once again, no trading for Friday. All right, so I think this one is going to blow your minds a little bit. If we have that previous structure and we just string it along, we can see Sunday, Monday, Tuesday. If we were to put trend lines here, that'd be an obvious downtrend, obvious induction trend. Come Wednesday, they made the low. Thursday, they spiked to the low, past that low of Wednesday, and then reverse off of that low. In the middle here, we have the signature trade, wedge, breakout pattern to the low. All of this is such a mind game, right? Just this, the first 3 days, is such a mind game. We have 3 days of obvious downtrend, where a low, there's a high, there's a lower low, there's a lower high, there's a lower low, most likely a lower high again here, and then a lower low here. All of this is created, generated to make you believe that the market is going somewhere. Where? Well, you're told to trade trends, just follow the trend. The characteristic is that it's a downtrend. How come we have a perfect, everything telling us to sell, yet it's always going to reverse on us? 80 to 90% of the time, you guys, if we have such a perfect example like this, with the signature trade in the middle, it's done. You're done. That's the only trade you need for the entire week. I trade one day, maybe 2 days out of the week. If Tuesday I don't see a setup, I look Wednesday. If Wednesday there's no setup, I look for Thursday. Thursday, if a setup happens like this, that's the only trade I need to take for the entire week. There are some people trading every single day, Sunday, Monday, Tuesday, Wednesday, Thursday. If you only, see, this is the key. All of these past days, it's like you're unlocking the puzzle piece, puzzle by puzzle, piece by piece okay? And then once you get to Wednesday, Thursday, it's so easy to see all of these pieces being put together to make the narrative, to make the masses believe that the downtrend is going to continue to the downside. Why? Because of all of these characteristics, all of the patterns being strung together. All of these, everything that I'm teaching you has a reason. Okay, there's a reason why we started this series talking about the daily structure, how it starts and ends the beginning of the day, ends with the next day in consolidation. All right, all of this has reason. Okay, there's a reason why this course takes multiple days to multiple 4-hour plus sessions of multiple days to get people to comprehend this, because it's not like you just jump in and look for a wedge breakout and try and make money off of it, right? It's a mindset, it's a psychology, it is understanding mass psychology, patterns, market manipulation. I have over a decade of experience in this market, so that's how I can do these commentaries as easily as I do them, see the market as easily as I see it, because I have 10 plus years of market experience and pattern recognition to back myself up. All right, enough with the rant. Here we have another example of the signature trade. Sometimes we will see, as you guys can see, this is the same structure basically here. But I'm just moving the wedge pattern because sometimes the wedge pattern will happen Tuesday, and then breakout Wednesday. So that's still Sunday, Monday, Tuesday, breakout Wednesday, low of the week. You're still getting a perfect entry. So no matter what, right, you're getting a perfect entry. If you're always trying to buy off of the lows after this strategy, right, whether it's Thursday in this example, you're getting a perfect entry, or whether it's Wednesday in this example, you're buying off of the low of the previous day, another perfect example of a perfect entry. Okay, here is where it gets even juicier, you guys. Here is 2 weeks of this weekly structure strung together. We can see what it does is create a macro trend. If you string the days together day by day, it makes a trend, an overall trend. And then if you week by week you string it together, it makes a larger macro trend. All right, so we have 2 daily variations. We have the induction up, which is prominent in a downtrend. So if the market is downtrending, we'll have spikes to the upside, inducing retail traders to buy in the downtrend. And then if the trend is downtrending, if the trend is uptrending, we will have inductions to the downside, inducing retail traders to sell, inducing the masses to sell, which is prominent in an uptrend. Variations, we have the induction up, induction up, induction up, okay? They purposely create consolidation, they create a resistance level, and then they break past it, inducing retail traders to buy. Also, look at this. Looks kind of like a head and shoulders, and they can just continue doing this over and over. Same thing with the induction to the downside. They're still moving up, yet they're pushing down, inducing down. In this example, They're still moving down, but they're inducing up, inducing up, inducing up. If you connect this together, look at what we get. Signature trade, perfect example of the signature trade. Basically, the signature trade is the point of no return. Once you get in here, there is no reason for the market to keep going down, okay? If you got this correctly, if you got in at the correct point of the signature trade, you will have no downside. You will have no drawdown, zero drawdown. That's why everybody loves our trading signals on Telegram. I will send a signal every few days, and most of the time, 70, 80, sometimes 90% of the time, the trade will instantly go into profit. Maybe it'll stay for 2 pips in drawdown for like 5 minutes, and then instantly go into profit. Why is that? Because we understand that this is the point of no return. This is the point at which retail traders, this is the final induction point. The final induction to get retail traders to sell into this obvious downtrend, and then what happens? They completely reverse against them. So here we have the downtrend, we have the accumulation of sellers, and then we have the massive seller induction, and then the reversal. Notice the seller induction is always past this low, or at least to this low, for it to be a valid signature trade. Micro and macro signature trade examples. Here's an example of a large signature trade pattern. We have the high right here of the signature trade, wedge pattern. We have the breakout breaking to this high. And then, what do you know? If you zoom in here and notice the characteristics are the same. We have the wedge pattern here. They're breaking out to this high. If we zoom in, we have the wedge pattern here breaking out to this high. Right? So we have the we have the micro inside the macro. You'll see this happen a lot in Forex. Once you guys open your mind, open your eyes to see all of the different patterns that are on the chart, you'll start to see patterns inside of patterns. And you might ask, well, how can we use this? How can I use this to benefit? Well, if you see a macro signature trade, you zoom in and you get a better entry point. Instead of just selling off of this high right here in this zone, you wait for this signature trade to form and you sell right off of this high right here. A lot of times this will happen where there's a macro signature trade and then you zoom in a little bit more, there's a micro signature trade giving you an even better entry. Simple and complex signature trade. So the simple signature trade is nothing more than a breakout, induction, reversal. The complex signature trade is a breakout induction in both directions. Now, this might seem very hard to understand or hard to, you might ask me, how do I know which direction to buy or sell if it breaks out in both directions? Well, in this case, we have the high right here. Let's say this is the trend. It's uptrending. It comes to a high. Well, if you see it break out to the downside, you're obviously not going to take the trade. You're not going to just jump in and, like a retail trader, like the masses do, and just jump into the breakout. No. Because if we understand the psychology behind this, what's happening is they're breaking out, so the masses are selling, right here, this initial breakout, masses start selling. Where are they most likely going to place their stop losses? The masses, above the high. What happens? They reverse the market, hitting the stop losses of the induced sellers that had their stop losses right here. But at the same time, this induces buyers because they're like, oh, this was a fake out of the breakout. So what are we going to do? We're going to send it up. We're going to ride it up with the trend. So what happens is it's a double induction where they break out to the downside, induce retail traders to sell, hit their stops. But as they hit their stops, they're simultaneously inducing buyers off of this high, grabbing liquidity in the form of buy limit orders, and then reversing off of that high. That's the complex signature trade. That's the simple signature trade. It's two different variations. Signature trade entry criteria. Always enter against the dumb money trend. Enter after the induction / breakout of the wedge, past the high or the low. Enter upon volatile stop hunt into the liquidity zone. So here's an example. Signature trade, midweek reversal. We have very obvious downtrend. Here's the signature trade, but this was the more complex version, where we see the breakout to the upside even though the trend is downtrending. We have the breakout to the upside and then a massive reversal, hitting the stop losses, smashing into that red zone, the liquidity zone, capturing all the orders, and then within 2 candlesticks completely reversing, smashing all the stop losses of the retail traders that sold into this induction. So either way, if you trade the wedge pattern like they tell you to trade it, either way, if you sell or buy, you're getting screwed on the complex version of the signature trade. So that's why we have to understand what's happening, the psychology behind it, and use the Forexia signature trade strategy instead of using what the masses do of just follow the trend, follow the breakout, brainless trading activity. You have to be a complete brainless incel to believe that those that are perpetuating this type of trading strategy, just follow the trend and buy the breakout, you have to think that they have some type of, I don't know, they either have something against you or they want you to lose, okay? They want you to lose money. More variations of the signature trade. So we have more and more variations right here. Here's one, here's another big, huge one right here. Here's another one. This was a complex variation where they broke out to the downside, then shot up, that liquidity stop hunt right here, reversal. Alrighty, we are almost 45 minutes into the video, so I think we're gonna pause it here. I'm trying to keep these videos as short as possible, but as you guys know, I love the signature trade, and I can't keep it under 10, 15, 20 minutes. Signature trade must be packed with value, as always. All right? If you guys enjoyed the video, once again, smash the like button. You guys can find a bunch more content on our website, forexia.net. So feel free to jump into our website. We have a bunch of free content there, free courses, all for free. All you got to do is enter your email, sign up, and you guys can get started. All right? Thank you. And also, we are running a giveaway for anybody that comments below these videos on these series. You guys can get entered into the giveaway we're giving away a few $100 plus entry into the signature trade course. So comment anything below this video. Comment if you learned something. Comment if you like it. Comment under as many videos of this series as possible to get as many entries as you want into the giveaway. And yeah, until the next video, guys, thank you. Hope you enjoy. Take care. Peace out.